Hello students, this is the first video on bank reconciliation statement. In this video, I will provide you introduction of BRS and I will cover the questions such as what is BRS, causes for difference in cash book and passbook balance, and who will prepare BRS. This video is more helpful to understand the basic crux of bank reconciliation statement and to cover the theory questions even. Do watch the video till the end and try to understand the concept. And do like my work, share my videos, and if you are comfortable, if you understand better, you can use thanks button and you can make the payment even. Now we'll take up the introduction part. So, as you are already aware that every businessman or business organization requires to open a current account with the bank to manage their bank transactions. All the bank transactions are recorded by businessman in cash book. Here, cash book refers to cash book bank column or cash bank account even. Either way, we can use this. So all bank transactions are recorded by the bank in passbook. So the accountant will record in cash book and bank will record in the passbook. Therefore, it is quite clear that cash book is maintained by whom? The businessman, entrepreneur or an accountant of businessman, and passbook is maintained by the banker. All cash and check deposits are debited in cash book, in the sense all receipt of cash and checks will be debited in cash book, whereas all check payments or cash payments even will be returned on the credit side of the cash book. Cash and check deposits are credited in the passbook and all cash and check withdrawal debited in the passbook. This is vice versa, opposite, right? So I will explain about this very clearly while solving the problems. I will make the next video on solving the problems. I will share the link in the I button as well as in the description box even, right? Then cash book debit is favorable balance and credit is overdraft balance. Whenever cash book is showing debit balance, it is favorable, in the sense our money lies in the bank. When it is showing credit balance, in the sense we have withdrawn more from the bank, that is called as overdraft. Overdraft in the sense excess withdrawal of money from the bank. It is a kind of a loan. Then it is vice versa in passbook. Debit side is overdraft balance and credit side is favorable balance, right? So we'll take up the next. That is what is bank reconciliation statement. This is very important. You must understand what is BRS is. The bank balance as shown by the cash book of a merchant should supposed to match with the bank balance shown by passbook, that is bank statement, on a particular date. Every month banker will generate a statement, in the sense statement containing the data of the passbook entries. So the cash book balance should supposed to match with the passbook balance, that is bank statement. But in actual practice, these two balances may not be same as on a particular date. Therefore, a statement known as bank reconciliation statement is prepared periodically for recording or for reconciling the balances shown by the two set of books. Reconciling in the sense ascertaining or finding out the reasons behind this disagreement between the cash book balance and passbook balance. Bank reconciliation may be defined as a statement prepared to reconcile the difference between the bank balance shown by the cash book and balance shown by the passbook. So this is what actually bank reconciliation is refers to. I hope I have given you clear picture with the help of this information. Now we'll take up what are the reasons, that is causes for the difference between cash book balance and passbook balance. So these are the some of the reasons that when a check is issued but not presented for payment, what will happen when we issue check? We here refers to accountants of a business, that is we maintain cash book. Please bear in mind. So we issue a check, we write on the debit side. When we issue a check, we write on the credit side of the cash book as a payment is made. But if that fellow is not presenting the check in the bank, then what will happen? There is a no deduction from the bank balance. In cash book we have reduced that. In bank it is, there is no reduction. Therefore there is a disagreement between the balance. In the same way, when check deposited not collected by the banker, we deposit the check but bank will not collect the money on a particular date. Interest on investment, dividend, interest on deposit, etc. credited in the passbook but not entered in the cash book. As per the standing instructions, banker will collect our incomes, credit in our passbook. Our passbook balance will increase, but it will sometimes it may not be informed to the accountant. Therefore, cash book balance will be less because no entry has been passed. Bank charges, interest on overdraft, insurance premium, etc. paid by the banker under standing instructions. Then what will happen? Bank balance will reduce when banks make the payment. But this information may not be available with the accountant. Therefore, he will not enter in the cash book. Therefore, cash book balance will be more. So this is one of the reason for disagreement. An amount directly deposited by customer in the bank account. Sometimes customer will directly deposit amount in the bank. Then what will happen? Bank balance will increase. There is no entry in the cash book. Therefore, cash book balance will be less. Then checks deposited but not entered in cash book. Sometimes we deposit the check but we forget to enter in cash book. Then what will happen? Those check, if it is credited, the bank balance will increase and cash balance will be less because we did not enter that. And checks debited in cash book but omitted to be sent to bank for collection. Sometimes we write but we forget to send to bank for collection. Unless and until we send to bank those checks for collection, how the bank will collect the amount? So error in cash book and passbook. Sometimes errors will take place in cash book and passbook. Now, who will prepare the BRS? So far what we have discussed, those are the reasons for disagreement in cash book balance and passbook balance. Now we will understand who will prepare BRS. The bank reconciliation statement is prepared by the customer, that is accountant or owner of the business, not by the banker. Please bear in mind, it is the duty of the what we call entrepreneur, owner, accountant. It is prepared periodically, usually at the end of every month. Generally, month will be taken as a period. It is not mandatory that month will be. It may be every week. It may be 15 days. It may be month. Any way as per the requirement of the entrepreneur. It enables the customer to check the accuracy of entries made in cash book and passbook. So what is the accuracy? Whether the entries are correct or not, whether the entries are correctly recorded in both, that is cash book and passbook, will be ascertained. It helps the customer to keep a track of the checks sent to bank for collection but not cleared, and checks issued but not presented for payment. So we need to have a track. When we deposit the check, we should see that those checks should be deposited, credited in the bank account. When we make the payment, when we issue checks, those checks should be presented to bank for payment. So this is the duty of the accountant to see. Sometimes direct payments, direct deposit, or direct payments made by the bank based on standing instructions. Sometimes direct deposits may take place by the banker, may not be communicated and recorded in cash book. In both the cases, the accountant should take care of those things. Clear? So I hope I have given you clear crystal theoretical picture of the BRS, which is very, very important. Right? So I wish you all the best. Thanks for watching the video. Do subscribe my channel, Mentor the Trusted Guide, and motivate me to make more qualitative and informative videos. Your appreciation is highly required to make more videos. Thank you very much.